Hi, this is Mani from bse2nse.com. So in this video we are going to talk about EMA, otherwise also called as exponential moving average, and what it means for a stock market investor or trader, and why it's kind of significant indicator, and why it's been relatively good significant indicator for a long-term investor or even a short-term trader. So I'm gonna show just a couple of charts and try to explain the significance of EMA. So this is Tata Consultancy Services chart for the last 1 year, and this is the candlestick chart with the everyday variations of the stock price. So basically EMA is nothing but for example, when I say I've marked 200-day EMA here in the chart. You can see the red line, and on the left here you can see the Tata Consultancy chart, and you can see the green line is 50-day EMA, the red line is 200-day EMA. So what it means is every day the stock price closes at a particular price. So let's say when we say 200-day simple moving average, we can just add up all the last 200 days closing price and divide that equally by 200. So we'll get a mean average kind of value of that price. So that will give us a simple moving average. The EMA, the exponential moving average, the only difference between simple moving average and exponential moving average is that it will give more importance to the recent values than the closing prices of the past. So when we just plot a graph of a relatively bullish company or relatively fundamentally good company, we will most likely see that the company will always trade above the EMA value. That is because for a good company we ideally expect buyers to always win over the sellers. We always expect there to be more demand for the company than the supply or sellers of the shares. So whenever we always expect it to trade above the EMA line most of the times. If you can see here, there's only few times like here that it has been trading below the 50-day EMA, and virtually for the last 1 year it has never gone down below the 200-day EMA by much. So people always tend to buy at the 200-day EMA because it's like a fair price of the last 200 days value. So people buyers always tend to buy good companies at these levels, and a good company always looks to stay above this line mostly, unless there's some weak sentiments or something, or there's a deeper correction in the stock market, or if there's something like a recession period, then the stock may tend to go below these lines. But a good company will always find its way out and will come back, and buyers will come back into the company and push the prices above. So as a long-term investor, for me 200-day EMA are price levels where a value investor can look to buy in. So for example, here and here, these are values where this particular zone, the entire zone, you could have invested. And even here, if you do not get the 200-day EMA line for quite some time, you can look to invest at the 50-day EMA line here, close to the 50-day EMA levels, here, and then here also. So it's not easy to predict when it will dip below the 50-day and whether it will go to the 200-day EMA or not. So part of the job as an investor is to have cash at all times, or be in a position to invest on a monthly basis, and check out the good companies and see if they are close to 50-day EMA and 200-day EMA levels, and keep investing in a systematic manner, and you should eventually make good amount of return on investment. So ideally, instead of investing in peaks like here's a peak, one more peak here, one more here, as a value investor you should look to invest at fair levels and not in the peaks, or not when most of the crowd is actually investing or pushing the prices above. So look to invest when you actually get a discount, when you are actually getting a fair price. So an EMA gives you a very good indication of that for a long-term investor. Now we've seen a relatively good fundamental company, and let me tell you that there are 5,000 listed companies in the stock market, and there will be hardly 100 to 200 good companies in there. Most of the other companies are relatively neutral or bad for a long-term investor or fundamentally weak. So let's check out. I'm going to show you another chart. We've seen Tata Consultancy. This is Kingfisher Airlines chart for the last 5 years, and we've again plotted the 50-day EMA and 200-day EMA lines. So again, the green line is 50-day EMA and the red line is 200-day EMA. As you can see, this is a fundamentally weak company, and I'm sure everybody knows that Kingfisher Airlines has been forced to shut down their operations. They got into too much of debt. Even with too much of debt and bad management, they could not survive, and they defaulted in paying the loans back to the banks, and eventually they were forced to shut down. And as you can see here, the stock price stays mostly below the 200-day EMA line. Just for more clarity, let me take out the 50-day EMA line here for a minute. Okay, so I've taken out the 50-day EMA line. You can see that there's only a relatively small there's only been some time when the stock has actually gone above the 200-day EMA, and it has stayed below it mostly. And when it's going up, it may actually have been a period when the stock market had seen extremely good rallies, when almost every junk stock is also going up with the good stocks. So that would be the only reason, or there might be some news based buying here, that maybe Kingfisher might come back up, something like that, some kind of rumors like that. But other than that, you can see that it just keeps going lower and lower, and it always stays below the 200-day EMA line. And for a trader, or from a trader perspective, once you know that a company is fundamentally weak or terribly weak, then you can look to go short at the 200-day EMA levels or exit at the 200-day EMA levels. Never look to invest for long term in fundamentally weak companies. Now if you want to learn how to find out which company is fundamentally good, which is fundamentally bad, I would suggest you read my book on art of stock investing. That will help you a lot as an investor, and if you are a new person stepping into the stock market, it will definitely help you a lot. So I think I have conveyed my message in this video as to what EMA is. And just for an example, if let's say today Tata Consultancy closes at 2200 and tomorrow it closes at 2100, the 2-day EMA or 2-day simple moving average is 2150. The 2-day EMA might be something like 2140. So it's nothing but what you would have learnt at school. Try to find the mean or average value of a set of 10 numbers like that. So when I say 200-day EMA, it's nothing but the average or mean value of the last 200 days with more weightage to the recent values. So I think I've conveyed my message with this video. If you have any questions or queries, feel free to post in this video. And for Zerodha clients of ours, we do give a free training session, and I would be glad to give you some free consultation as well. Subscribe to our YouTube channel for more videos and to stay in touch with us. That's it for now. Thank you.